Hello again, everyone, and welcome to the Options Mentor. We had quite a week, didn't we? Especially with that move on Friday. Finally, the market cracking a little bit, acknowledging, hey, the economy's not in great shape. And the Fed, of course, didn't give them what the market wanted. There were a lot of articles that said they expected the Fed last Wednesday to basically confirm a, a rate cut in September. I'm not sure if I ever remember the Fed actually outright confirming what they were going to do at the next meeting. Sometimes they make it seem real likely, but apparently they did neither. So the market didn't like that. And then the coup de grace, they say, was the Friday morning jobs report, which came out very weak, like 122,000 jobs or something like that. And they were expecting 175,000 new jobs. Of course, revised the previous months down, which they've been doing now for 2 or 3 years. So things looked pretty bleak there. And as the day wore on, sometimes Friday can really compound that kind of behavior because you're looking at the weekend. Then you also have very low volume in the summertime. And as I've been telling, the traders I work with, August can give you, particularly in my experience, the last couple of weeks of August can be a time for some nasty, nasty down moves. Well, this was a little earlier. I don't know if we're done yet, but we'll see. Traditionally over the last few years, the market has used these type of events as a buying opportunity. So we'll have to see if that's indeed what they decide to do this time. And if they do, I have a trade, a speculative trade that could work in that scenario. So let's take a look at things here. Let me share my screen. And I'll share that chart. Holy cow. What a drop. All the way down to 122 points lower, something like that. Um, and I was looking at this, and there's a gap up there above 5,400. And so, what if you expected? And I'm not saying I do, believe me, but what if you expected that you thought, hey, we got a decent chance of the market going back up this week by Friday, filling that gap and maybe a little higher? So, what could I do about that in a speculative way? Well, there's a number of things. I'm going to show you one here. I was actually published on this strategy called the time bomb strategy. I had an article on it several years ago in Modern Trader magazine. I had a couple different articles. This was one of them on the time bomb fly. The reason we call it a time bomb fly, what you do with this is you're setting it out somewhere out in time on an expiration day that you think whatever the vehicle is, in this case, I'm using the SPX. But if you expect a vehicle to get to a certain level, whether up or down, by a certain date, this is the kind of trade you can use. Now, how do you determine that? Now, I don't have a system for telling you how to pick where something's going. That's up to you, however you want to do that. Maybe you use technicals or whatever. I'm just showing you what you can do with it if you care to speculate on your opinion of where and when something is going. And the reason we call it a time bomb really is just, we're going along, and then boom, it goes off here if you get in a certain range. It's just kind of a catchy name. It's really a directional butterfly. But in this illustration, I went out to this Friday. Now, this might be where when you think we'll get there, when you think, hey, I think this coming Friday, you might think that we're going to be around 5,450. So what you would do is maybe even tomorrow, go out and center a fly there. So in this case, I did a 20-point wide call fly. Now, this is over 100 points above the market, isn't it? The center of it is anyway. And then I went up, I sold the 5,450, I bought the 70 and bought the 30. Now, you could do this wider, it just costs you more money. Of course, that also gives you more room for it to work. You could do it more narrow, costs you less, you have less room. The more narrow you are, generally, the more exponential type of reward you could get. As you can see here, if you could put this on for around $1, it's trading at 95 cents or just a Sunday, and you got up in here in midday or something like that on Friday, you would have a pretty good win. That would be a pretty good win up here. So how wide you get, that's up to you. How much are you willing to spend, and how many contracts, of course, be the same. I would recommend you just don't ever do these things with the milk money, as they say. This is something highly speculative, and you could easily, in fact, probably even statistically, you're probably going to lose all this money if we don't go where it is. But if you're right, this is sort of a small kind of conjecture, wager, however you want to put it, on what you think is going to happen in the market. This isn't something you load up on, that type of thing. But you could see for around $100, you could have a pretty good win here. Sort of like a lottery ticket, So wherever you put it, however wide you put it, whether it's puts or calls, I usually use puts if we're below, if you think we're going lower, calls if you think we're going higher. One of the reasons to do that is you won't have anything in the money. That's particularly important in stocks. So if you put this on with puts and say Apple, well, you're going to have to close it because these puts would be in the money and you'd get assigned. So be careful with that. But this is a very interesting strategy. I am going to include it in an upcoming course I'll probably be working on later this month. And I'm going to do a sort of a speculative course. I'm going to talk about directional flies, directional diagonals, back ratios, those type of trades that you can use in special situations where you think the market is going to do something and you care to put a trade on that expresses your opinion. But this is kind of an introduction to that idea for you here, the time bomb fly. And you could use this in stocks or anything that's optionable that has decent liquidity in their options. You could even do this in commodities, oil, corn, whatever you want to do it in. But I thought this might be an interesting thing. It's a little hard to stay here on Sunday after we had an over 100-point down day on Friday. What's going to happen this week? So I'm just taking a wait and see approach going into tomorrow and see, if we recover or what happens. And this could be a trade that might be on the table for some if you want to pick a direction. But I just want to let you know you could easily pick lower. This is up to you. All right. Well, thank you again for coming by my channel. Please check out the description where you can find out how to be with me every day over at Arimer.com. Traders Lounges, Help Desk, Opening Bell, where I review what looks good today trading wise and answer questions about adjustments, all those things. It's all there in the links, as well as my previous courses. Still going well. They sell very well. People, a lot of interest in them. The all put flat fly course, which is a good asymmetrical fly course. Calendar course, which goes into calendars and double counters. I also have a diagonals course, which of course covers single and double diagonals. So it's all there. All those courses are available over there, as well as that daily access to me and my trading service that you can also follow along with me on trades. So I will talk with you guys next week. Don't forget to hit the like and subscribe button. Tell your friends. I appreciate all your support. Have a good one. Bye-bye.